Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. An indecisive doji cross on Friday after the previous session's bullish opening white Maribozo and third bullish white soldier. The market got stuck, unsurprisingly somewhat, with stratified and layered overhead congestion stretching from 68.69 up to 72.29. Now prices failed to push up through it, closing for a second session about 2/3 of the way up through it. This failure to really push up through this congestion may be telling, especially for target X overhead at 73.25. That's the doubling up of the recent break above the dark blue May and July 25 to January 26 bear channel. I suspect we may have seen the last of that one, and I'm now considering retiring it. Now, so far today, a gapping move lower with changeover move out of the overhead congestion between 68.69 to 72.29, down through the July 21 low at 67.43 and the bright red neckline extension currently at 66.39, only finally slowing and halting after piercing the combination of the flatlining gold long moving average currently at 65.78 and the December 2021 low at 65.66. Spot gold. A hell of a lot of action last Friday, with the largest single sessions move this market has ever seen. It was a bearish long black Maribozo, though interestingly not a weekly key reversal down. Plus, as I said on Friday, we were set up for a 3-day bearish evening doji star pattern, and that is what we also ended up with. Prices were capped by the 100% projected Fibonacci line at 54.48 and the upper bull channel line of the January-based bull channel before thundering down through the bottom of the bull channel, along with a load of supports that have now become resistances. We ended up between two sets of congestion. The overhead resistances between 49.14 to 49.43 and supports below between 47.41 to 47.88. After earlier dropping all the way down to test the 38.2% Fibonacci line of the late May 25 to late January 26 move at 46.97. Now, so far today, a much lower open, not a gapping move lower, but sufficient to be considered one elsewhere. Prices did move up to unchanged from Friday's close for a little bit, but then have fallen again, this time all the way down through the green short medium moving average, currently at 44.53, halting this time at the 50% Fibonacci and the same move we found support on Friday from the 38.2% Fibonacci line of the late May 2025 to late January 2026 move at 44.20. Now we've since rebounded upwards back to the 38.2% Fibonacci line of the same move and look like an indecisive doji cross right now. However, well, maybe indecisive spinning top possibly. However, the big overall pattern for January is now a V top. And the question now is whether the market will form a V top to this shelf, to this V top pattern. So we've got the V top. Will it form now a shelf to this pattern, or will it not and carry on lower? Bitcoin. Okay, as I said last Friday, a lot has happened here in a very short amount of time. First off, the recent pattern here, after the failure of the bullish cup with handle pattern in December last year and January this year, is now a very large bearish halfway hesitation. An October 2025 to date bearish halfway hesitation, with the main hesitation part captured overhead by the resistance of the neckline, currently at 97,431, of the November 24 to February 25 double top, and below, well, sort of, by the neckline extension, currently 88,301, of the August to October reverse head and shoulders bottom. Though you could argue it may be the now broken December 2025 today uptrend, which is currently at, I think, 86,174, sorry. Which I actually would argue is a better fit for the lower trend line, for the bearish halfway hesitation pattern. Additionally, the break below the bright pink neckline, which is currently at 85,267, that's of the January-based lopsided head and shoulders pattern, is also in the mix. More recently, Friday saw a significant close below the 61.8% absolute Fibonacci line at 78,028. All this tied in with the previously laid out targets below for the January lopsided head and shoulders pattern. Both the primary target X3 in the 80,850 zone and the secondary hard to reach target X4 down in the 76,030 zone were reached on Saturday, which was very satisfying. Plus, we ended up with a monthly key reversal down for January on the same day. This leaves us with the big bearish halfway hesitation, and on Friday I laid out some possible downside targets. Thus, now you've got to remember there are different breaks in this, so it could be any one of those. Thus, for the bearish halfway hesitation, well, we have a number of possible targets below, as the upper leg of this pattern dates from early October last year, and there are plenty of points since then to start mapping moves lower. Hence, primary target X would be down in the 72,100 zone, with a harder to reach secondary target X1 down in the 64,000 zone, and a tertiary target X2 down in the 54,000 zone. Additionally, we also have the newly drawn bright green early October 25 to mid-January 26 bearish Andrews pitchfork. Today the market is in between the overhead bright green upper time, currently at 88,422, and the bright green middle time below, currently at 65,993. Now I am prepared, of course, I'm prepared to finesse this into a shallower bullish shift pitchfork for the same move if it is required. Now so far today, well, a move down to the April low, April 25 low at 74,401, before a bounce higher, but only as a start, actually as far as the 61.8% absolute Fibonacci line overhead, where we have stratified, and then below we have stratified supports from the April 25 low all the way down to the 50% absolute Fibonacci line at 63,129.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.